Finally, I'm back, and you are listening to the StockInvest.us podcast for week 16. A lot of things are happening this week, and we'll try to dive into some of it. Some of you have been missing me. I promised you only 2 weeks off. It became 4 weeks. The reason for that was, as I said, I was having a short holiday in Egypt for 2 weeks. But just after getting back from Egypt, I had to go to Norway for a short time. I've been doing that before, and while being in Norway, I often made podcasts outside. This time I simply did not have the time. But I'm back, and I'm in a situation where I want to transition this podcast into a new format. So this will be a small bridge. Next week the format will be a little changed. You will recognize some of the format from previous podcast in this podcast. So what's up? What's been happening since last time I was on the air? Well, gold is going up just as expected. It's very nice to see because I have a lot in gold, and as I told you, I think that is a good position to be. I'm in gold stocks, but also physically into the gold. Some of the reason why gold is going up is of course because the expectations for further interest rates are toning down. The expectations are less, and as interest rates go down, gold usually go up. They are correlated. It has to do something where you get the best return on your money. On top of this is all the things I told you about BRICS, and for those being loyal for all these years I've been doing the podcast, every word seems to come true. What I told you about how the world will be divided over the Ukraine conflict, how BRICS will position itself, and now I see it in the news media, in the mainstream media every single day. Some story about how BRICS is evolving, how the sanctions are backfiring, how the world is getting more and more divided, not only like political in terms of wars, etc., but also economical. BRICS is building up in a super fast pace, and this is the first investment advice. Some of you should, if you have such a size of your portfolios, consider to look into investment into BRICS related countries. The reason for this is that economy has now, it always has been used as a weapon in conflicts, either political or directly. And now the table is turning a little bit. The last thing that happened now was, of course, OPEC Plus cutting the oil production. And as I said to you, I think oil again will crawl very, very high. And now we're starting to get into all the same things I've been speaking over and over again about high energy prices will mean that inflation will not go down. You might get confused because you see in the newspaper that inflation seems to have been topping out. Last inflation numbers were a little lower than previous, around 5.5 or 5.6, don't remember exactly. But this is based on the oil fall, where oil was taken down from above 100 down to the $70 level. Biden releasing millions of barrels from the US Strategic Petrol Fund into the market, trying to push the prices down. Now there is not much more to push out into the market. US is in a situation where they at some point have to buy back oil. And of course, as the world has been divided and politics are such, now the Saudis and everyone is getting a little back by pushing oil price up. They reduce production at the same time the demand is increasing. I think, as I said, oil will have a second rally, and of course I'm positioned into oil stocks. I told you very, very early on, I think that is a safe place to be. So I said it's very easy to get confused. You read one news one day, and the other day you can read the same story but a different angle. That is why I have tried over all these podcasts to teach you to look into the long lines, because these should affect how you do your trading, what kind of stocks you position into. It's very easy to say that yes, there will be a upside like we had over the last few weeks. I think the markets has been moving up around 800 points since last time I did this podcast. That was a little bit obvious. As I told you, a lot of stocks were oversold. It's very natural, but easy come, easy go. What if markets now turn? And as we will see in just a few minutes, if you look at the chart, there has been issued a major sell signal from double tops. This may not occur because the markets just have to go about 12,300 points and it will turn into positive signals. But there are things indicating that we might again head for a downturn. At the same time, I still stand by the things I said. I think by end of May we will finally see the end of the bear market and be for sure in a bull market. Maybe we already are. Now let's dive back to these things about long lines. So you heard me say that oil prices are going up and market is celebrating inflation going down. So what will happen when oil prices again, energy prices again is fueling upwards? Well, the short celebration for inflation will be short-lived. The reason for this is energy account for a huge part of the inflation measures. Just imagine all the logistics, the energy cost related to heating and other electricity. It is a huge part of the inflation cost. Now, what happens when oil go from 70 to 80 and like it looks like now, heading for another up to $100 again? The inflation will follow. And what happens when inflation go up? Fed will have to increase the interest rates. The last news I was reading in the media lately was that now they think that Fed will only do one more rate hike. And as I'm a Norwegian, I follow Norwegian news quite closely. And there you had a lot of experts saying, oh, we can prepare for a huge fall in the interest rates. I think all of them are wrong. When they said there will be no high interest, I told you I think the interest rates will go high and they will go much higher than anyone thinks. So far, I was right about that prediction, and my continuous prediction is that interest rates will have to go higher as inflation will be used as a weapon. World, as I said, is split in a conflict. Excuse me. Where we have a much more divided world than we had just 2 years ago. Countries are taking sides, and now we are deep into not so much stock-related things. Actually, they relate quite much to the stocks because it will be about how markets will move in the future. But France just recently said that we will not be a puppet of America. We will buy energy from wherever we find suitable, meaning that they will buy from Russia, etc. Now, these things, of course, is political because Europe has been hurting by the high inflation. And there is a sort of uprising in many countries. We are hitting a lot of waves at the same time. The elderly wave is here. Macron just pushed the pension age up. He has to do it. They have to do it in all the European countries as well, simply because there is not enough money to pay for the future pensions. So one way to do it is to increase pension age. All of these things speaks for some long-term trends. We know that the stock market is moving a little bit different than the general economy, but trying to sum up what I said, I expect that inflation again will start to move up, and I think that will scare the market a little bit as interest rates will be pushed higher. I think it will be short-lived, as I said over and over again in this podcast. For the last 3 years, there will be a recession. I think it will be this year and next year. And there is an opportunity. Stock market will turn long before, as I said. Following the long lines, and you see there is a lot of instability. Very hard to say exactly how things will land. How will the Ukraine war come? The last leaks of documents from Pentagon, etc., shows that the US is heavily involved into the Ukraine war, along with Germany, UK, and other countries. Is the war about to escalate? And what about Taiwan, which I said I think will come up as a conflict during the first half of 2023? Well, that is even getting more aggressive day by day. When things are, and you can see as I'm trying to convey to you that the future outlook is unstable. That speaks to me and to many like me. Gold may be a safe haven. There is tons of speculations around the dollar, around the position of the petrodollar. I will not repeat so much in this podcast. We'll get back to that in future podcasts, but there is a lot of arguments why gold may be a place where you want to be. Now imagine that I'm not correct, that markets finally will turn in the end of May, and from that point we will go into a bull market. Then again, gold will be good, and if we are going to a bull market, gold should still hold somewhat okay. But enough argument for gold. Gold and oil is still hot in my world. In a few minutes, you will also hear that today's tip will be NIO. But that is more based on chart, and also because there again is a little attention back to electrical vehicle and climate change. Now, that was a somewhat long introduction into the things, but think about the long lines. Next week, I will tell you a little bit about correlation, how things correlate. This was just a short introduction to this, where you can go into stocks like correlate with the oil, stocks that correlate with gold, or they have a negative correlation, meaning that if gold go up, these stocks go down, or oil go up, some stocks go down. You can do this correlation even on the market itself, because some stocks are going up in a correlation when the market is going down. Getting back to these things. But think the long lines, it will make your trading so much better. What about the short term? Because that's what most people have on their mind. What will happen today? What will happen tomorrow, etc. How will the week be, and how can I gain from it? First off, it's quarter season. Tons of quarter results will come in, and the general of these things will be the following. Bank sector will show very strong quarter results, simply because they are anyway scamming of you. They are delaying to when interest rates go up. They are moving much faster than anything else, charging you more interest rates, and when interest rates go down, they are just very slow. They are scooping in all ends. Bank knows how to make money, and this is the perfect situation for banks to make money. Expect bank sector to do good, while the general for the most of the other stocks, I would say except oil stocks, is that margins will be under pressure. The profit will be under pressure, and the margin will be under pressure. That is because of the inflation. Customers cannot handle the inflation and increase of prices fast enough, so the shops haven't been increasing as fast as the overall inflation, meaning that the profits is getting less and less. So I expect this to be the case, and you should really know when your stock is having quarter results, because usually you see high movements days before, and especially on the day of quarter results and the days after. There are so many quarter results coming out this week, so I will only mention 3, which is very popular, and that's Tesla will come tomorrow after market close, together with Netflix. And on Wednesday there will be Snap. In addition to this, I saw JP Morgan's, etc. were coming with quarter results. I will also guide you and help you where you easily can find quarter results. We'll get back to a more practical approach about this in next week's podcast. Markets themselves were slightly up last week, but not by much. It was 0.32% for Nasdaq, ending the week at 12,123, while Dow Jones were up close to 1% at 0.89% for Dow Jones, or 300 points. Oil was up, currently at 82, and as I told you a few times already, I think oil will continue upwards, and I think there will be some nice dividends from oil shares in this quarter season as well. Gold 2024, heavily up since week 11. Before the weekend it was flirting with all-time high, and I think all-time high might be breached this week, or very shortly. And as gold go up, silver go up, and there is plenty of opportunities forward in these currencies. 10-year treasury yield, which is the one number that I've been talking most about over all these years, as this number go up, stock market go down, well, it's been falling a little bit, and we have seen the markets being up, currently standing at 352. But I really think that this will again crawl up, as Fed soon enough will announce that they will have to increase the interest rates a little bit more. Hopefully I'm wrong, because we already start to see the negative effects in the housing market. So there are several things colliding, and many of you will think that okay, so we have more news. You have to understand that the stock market has already accumulated tons of negative news already into the prices. There is so much baked into the prices, but nobody knows exactly what and how much that is. Meaning that, again, you have to follow news, read up on news. I do understand you may not have time to read as much news as I do, but at least read headlines. Scan through several different newspapers to get variety and not one-sided news. Check the headlines in all of them, because your brain, as I said many times before, is an amazing tool, and it will collect information and maybe connect a few dots over the time. The two things right now is, of course, the Ukraine conflict, which at any time can escalate. We need peace talks. More important is the upcoming Taiwan conflict, and if you are a news reader like I am, maybe you noticed that China said to Germany, I think it was this weekend or on Friday, I'm not sure, that they hope there will be no interference as they will take over China. China believe that Taiwan belongs to China. US has a very clear position. If anything happens in Taiwan, they will interfere. And over the last, especially last few months, China have been building up their armor around Taiwan. More and more warships coming up. More and more flights crossing Taiwan border or very close to border. So the tension is really increasing fast. And this may suddenly spiral out of control. And one thing that will happen if there is some very brutal news is, of course, the market will take a huge dive. That is why you should be diversified in your investments, and maybe again, as I tried to convey now for the better part of 19 minutes, there is still a lot of instability out there. Meaning that I again recommend you to have a portion in gold or oil. Two things, because if a war breaks out, oil will skyrocket. These things can hedge you if the market falls. And then you can do some more into speculative stocks, because oil and gold will not move as fast as many of the stocks. I've seen a lot of biotech stocks going crazy lately, and of course AI had a wild ride, and you can jump on some of these. But easy go. when you have a certain amount of money invested in the market, you should make sure that a part of it at least is secured up to something with less volatility. It's up to you. It's just my recommendation. The end game of this podcast has been, and always will be. We want you to reduce your losses, increase your gains. Now, we will end the podcast by looking at the chart. If you're listening to it on audio, it will also be available on YouTube, and at YouTube you can see me and you can see some charts and some other information. And I already picked up the chart. And what can we see from the chart? Well, the chart says exactly what I said. There is a double top formation issued. A huge sell signals way below the 10,000 mark. How solid are these signals? I wouldn't bet all my money on them. The signals and the formation. This is a formation called double top. You have many formations. They have to be verified. Looking at overall picture, we can see that Nasdaq is in a slight upward rising trend. It has a buy signals from the relation between the short and the long-term moving average, and even from the two averages, the short and the long-term, there is a buy signal. Relative strength index is not overbought. It is 16, so there is still room for upside. Plenty of support below. Makes me a little bit more safe, because it means that you shouldn't expect too heavy falls. Really huge falls will have to be some breaking bad news, scaring the market totally. Right now, that fight between greed and fear is somewhere in the middle, and greed and fear can often be seen using different gauges and house indexes that will tell you a little bit where we are. Right now, the buy signals are across all the board, 31%, so it's neither high, it's neither very low. Going to Nasdaq, it's as slow as 23, can easily go up to 40, been at 40 several times before. New York Stock Exchange 26, while if you go to Tokyo and Asia, it's 37, while Shenzhen China is 22. So these indicators that tell you something about the greed and fear in the markets, they are not on any side of the scale. They are more in the middle. Flipping back to the chart. The chart, as I said, has a strong formation showing a downturn. But if broken up, if broken about 12,300, markets easily go to 13,000. This is called a false signal. Huge chance that may happen, because the volume is following the market somewhat okay. I like that. What and how to play this? Well, normally you would do like this. You will be somewhat careful until you see the real direction. But if market is standing upwards to 12,000, sorry, not 300, but 200, if it is pushing above 200, you can invest a little bit more, because there is very little resistance about 12,200. Having a lot of support on the downside, as I said, that means that you cannot expect very huge falls down. There are support levels at 12,000, 11,800, and I think that to bring this down very fast has to be a major news. Last lesson in this topic, before we look at the actual stocks, if you're watching on YouTube, you will see a long stippled line from around mid of January till the end of March. So it's almost 3 months stippled line, 2.5 months, something like this. That is, according to the theory of formations, this is the time span it will take the signal to reach the bottom. So if we use this theory, it just says that if we go 3 months forward, by this time the market will have a turn down to around 1000 points. So that is how you use these formations. It is within 3 months you can expect the markets to be down to 10,000. Speaking about Nasdaq here. All other indicators are positive. We will see which one will win. Now we will just have a quick look at the shares and see how they go before we get ready for today and trading. Now, when I left you, I had 3 stocks in the portfolio. It was Sumerica, it was Northrop, NOK, and it was Chevron. So I was into speculative stock, which we've been for a very long time. I'm into the weapon industry. As I told you, they will make and will continue to make tons of money. And as I said, oil will be, in my opinion, on an upturn. During my absence, Sumerica hasn't done good at all. It was very strong plus. Now it is down 18%. It fell back to 21 level, 21 cents. It's a pet stock company, a small stock that we had for a long time. Northrop is currently at $472.57. It's up only 1% since we bought it in week 7, so it hasn't performed, I would say, anything special. Chevron, however, is also at $172, $172.44 to be exact, is up 6.35. As I told you then, when I was going to Egypt, I didn't want to stress. I wanted a portfolio which I didn't want to worry too much about, so I didn't invest further into more stocks. Now, maybe you are a new listener, so let me just explain this shortly. For more than 1.5 years, I've been giving you a portfolio. It was extremely successful last year, such strong gains. The start of this year, I would say, have been moderate. We are in the green, but it hasn't been extremely successful the first part of the year. But I stand by the things I said. I think this year will be even better than last year. Now, I have 3 stocks in the portfolio. How will I play the week ahead of us? And just to mention that I have several other portfolios than this. This is just the podcast portfolio, which I made so you can see how I trade, and I'll tell you how I plan. And I will tell you, as I told you earlier on, I will try to buy NIO this week. How will I do it and when will I do it? Usually, to make sure that you can follow or at least track the things that I say, I buy the stock on the Monday. So I will try to buy NIO today. Very often, I do the trade around half an hour to 45 minutes after the exchange opened, because that is very often the low of the day, statistical low. Now, if I see a certain pattern, it may be that the stock is on a high upturn. If it's too fast, in my opinion, I will just wait it out till I find a good position. I look at how Nasdaq is moving, and I look at the stocks, how they are moving. If it is in a very straight downturn, meaning that it has a very straight trend line downwards, I can wait much longer trying to find the best low. And usually I don't find that very exact bottom, but I am often very close. This gives me the leverage of maybe 0.2% or 0.5% or whatever it is, which I really like. I am not hunting hundreds of percentages, because to do that you just have to be extremely good, take extremely risk, or be very lucky, or all of them in one. I am super happy doing 6% in a week, because 6% is amazing gain in 1 week. And if we look at the market as such over a full year, how did Nasdaq go last year? Well, you can check for yourself. And we are doing more than 100% gain in the portfolio when the market is falling. That is just outstanding good. I would be happy with even 5%. This is the lesson about greed and fear. As long as the market goes down, you should be happy about any gains, and of course you want to be better than the market when it's go up. I'll try to hunt NIO as cheap as I can today. get into it, because when looking at the chart, I see the possibility for a short run in this stock. And NIO is very volatile, meaning that it can easily go up 10-20% and then just fall back to the same. I think it's been doing that up and down since I was away as well, and even for the last half year it's been up and down from 8 to 12 and 9 to 10 and 10 to 11 and etc. Now the last question you might have, so when will I sell? I usually do like this. I try to buy the stock as cheap as I can. Then I put on a trailing stop loss. In the case of NIO, it's a very, very volatile stock. The common rule is that I use 5%. If it's a very, very solid stock that doesn't move very much up and down, I can do 3%. But in general, to make it easy for you, I just use 5%, meaning that the stock, as it goes up, the stop loss is also moved up, never down. So it will be 5% from the highest point. I do not have time to day trade, because we are building a lot of new services. Among these is the live signal. So very, very soon you can enjoy super nice live signals at Stock Invest. You just type live.stockinvest.us and you can see the beta version being built right now. Very nice algorithms are coming. Everything will be connected 100% to live feed. So I recommend it start to take a look, because here we will try to help you with your intraday trade. So this is what you can consider a medium to almost a long time type of portfolio. And I lose out, of course, on some of the profit just using this stop loss strategy instead of checking the stock minute by minute and selling when I think is the top. At the same time, it's very, very easy to follow. So I'll buy NIO as cheap as I can today. I will put on a trailing stop loss. NIO is so volatile, so it might be that the stop loss will be a little wider than 5%. We have to see. If I hit it correct, I think, I hope, I believe that I can do 5 to maybe 10% on NIO this week with this very, very simple strategy. I always promised you to tell you more how you can time your sell, and that will be the final and last tip of the podcast. Use support and resistance. If you use TradingView or other charting programs, you have to pay for something that you can get totally for free at us. We was the very first to do it. Actually, I was the very first to do it back in early 2000s, showing the accumulated volume on the right hand side of the bar, representing the support and the resistance. Now, as I told NIO, I think it's traded around 960 or something around there. You can look at the chart, look at the right hand, you will see some gray bars. These will represent how many stocks were bought and sold at a certain level. Now, if there is tons of resistance around 10, this usually indicated to be a good selling position. So if you're day trading, you are on a run in a good stock and you wonder when should I sell, there are some very few like common rules. Round numbers usually work. You especially see this in Tesla. You also see this in different stocks. So if it hits 200, of course it can be a little bit above 200, but in general 200, or in the NIO case 10, 11, 12, these are usually numbers to watch out for. Then there is the resistance levels shaped mainly by volume and trading. You can dive deeper and use the resistance from the moving average lines and a few other things, but just make it simple. Look at the support and resistance line at stockinvest.us. You will even find tables showing you the exact numbers. They will help you better time your sell. That was this week's podcast. I even lost the templates from my previous podcast, so the YouTube version will be a little bit different than last time. Next week I will be back with a new format, still thinking exactly how to shape it to give you what hopefully is interesting information. I have been thinking for a few weeks actually, and I know so many of you want more like the exact stock to buy. Which stock should I buy? And I can pick stocks for you, but you will just blame me if it's wrong. It's much better than that you learn how to pick. And just rewind podcast back and you hear me talk about pivot points, about using RSI. And that is my intention, help you to choose stocks. And if we sum up this podcast and the things I try to convey, look at the long picture as well. That is such a good thing, helping you instead of just jumping on a meme stock or whatever. Of course you can do meme stocks, you can do penny stocks, whatever, but I recommend you to have a solid part of your portfolio into things that are in good trends. Trend is your friend. You can watch the stock and you can even see the trend lines, and usually you should go in an upturn trend or in something which is trending in the long future. So what are the long trends in the future? What are the things you can expect will be emphasized as we move forward? Sadly, as the world is arming up, NATO countries are arming up to reach the 4% level. Across, even down in Africa, now more wars are escalating, etc., etc. Everyone is buying weapons, meaning that the weapon industry, everyone who supplies the weapon industry, supposedly should do good. And note, just a short note I noticed lately, I hope it is correct, don't blame me if it's not 100% correct, but I saw or read that Warren Buffett is selling out of Taiwan semiconductor. What did I say about the Taiwan conflict coming up? Who else is providing semiconductors? There are a few of them building up in the United States now. Everything, even you listening to me, is based on the access to semiconductor. It's everywhere in all sorts of equipment, car, mobile phones, computers. That was the last tip. I hope you enjoyed this podcast. Sorry it was a bit unorganized. As I said, we are moving into a new format. Happy to be back. Hope you are happy I'm back. And we'll speak in just a week. Until then, have the best week possible. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information you agree and are held liable for your own investment decisions.